Hello, dear internet friends. Today we will be talking about something we all love, money. But what's in store for money?
One trend that we've witnessed over the past 11 years, and certainly a hype in the last 4 years, is blockchain. But speaking more broadly, digital currencies are all the rage, and slowly but surely, even the folks upstairs are noticing it.
In fact, a Forbes article from June says that in today's world, central bank digital currencies are evolving from a topic of interest to a high potential tool for economies around the world to better address the massive economic impact of the COVID pandemic and beyond.
And indeed, Deutsche Bank is confident that the CBDCs will replace cash in the future. China and Sweden are moving towards an adoption of the CBDC. The president of the European Central Bank believes that digital euros will be a reality in just 2 to 4 years. And even Facebook is joining the game with their own cryptocurrency, Libra.
Just 1 month ago, a commission by the BIS, or the Bank of International Settlements, released a report on foundational principles and core features that they want to see in individual countries' CBDC. But what are CBDCs and how are they going to help us paint a utopia? Let's dive into it.
All right, so welcome to this week's episodes of UTX. We're going to talk about central bank digital currencies. So, a central bank digital currency is a currency or represents a digital form of any fiat currency of a nation or a region. And what makes it special is that it is issued and regulated by the competent monetary authority of the country, usually the central bank, with clear distinction of the responsibilities.
Yeah, we cannot do this podcast without stating some money basics. There is three functions that money has, which is as a medium of exchange, which is as a store of value, and also as a unit of account to be able to compare different prices for different items. Now, money only works if the people that use it believe in it. Historically, there has been some backing of that money, some value that the money inherently had. And today, the whole thing looks a bit different, and we're looking into this further later on. But as for now, we know that a monetary system needs to be good, and we're going to define what good is, so that people believe in it and use it, which only then it can come into life and serve its function.
Exactly. So when discussing money functions and a markets or a system, we also need to look at what types of money are there, right? What when we speak of money supply or now these digital currencies, which aspects of the monetary system are they going to replace? So we have a distinction into four unique and different understandings of money market, each nestled within the other. So the base or the smallest unit is M0, which is the base money. So this includes all currencies, all coins, and all bills. And this is the money that is actually cash. It's legal tender that you can really touch and feel, issued by the central bank. You have notes, coins, what have it. And as opposed to, as we mentioned, the previous commodity standards, be it money that was fixed onto the gold value in the gold standard, this money has no inherent value. So the sheet of paper in real life has no value in that it is just a sheet of paper with some coloring and some plastic in it. It is only our belief in it that gives it value. And to make sure that it's not entirely that it has no inherent value at all, it is backed by some reserves and deposits that the central banks hold.
Yeah, in the case of the US dollar, it's also, that's why we call it the petrodollar. It's the fact that a large part of global oil business or trades has been settled with US dollars. But that's a special case for the US dollar only.
Exactly. Do you want to go on with the next?
So Yeah, why not? As you've mentioned, that's M0. In this model, there is also M1. M1 is essentially what we just said, which is the physical coins and bills that you can pay with that are issued by central banks, that are state-backed money, plus additionally private money, commercial money, in this case deposits in checking accounts. Checking accounts as opposed to savings accounts, but it's accounts at a commercial bank. As we know, commercial banks can create money by issuing credit. So there is the fractional reserve banking system, which means that if you bring, let's say, $100 to your bank, the bank is able to give a certain amount of money out to others, which is more than what you brought them initially. And this multiplier effect, this creation of money, of private commercial money, is one of the main functions that commercial banks save in our system. So M1 essentially is checking accounts plus M0. M2 is now this in addition to savings accounts plus time deposits, which have a maturity date. We don't want to go too deep into this, but let's say for now that M1 and M2, which is the private commercial money, is most of the money, the majority of the money in circulation. M3 additionally accounts for money market funds, which is in our case, what we talk about is B2B money, money that is settled and issued in between central banks and commercial banks. Overnight, commercial banks can leave deposits at central banks. They have the ability to to borrow additional money from central banks. Now, this is interesting because as we talk about central bank digital currencies, we are not talking about so-called wholesale CBDCs. We're not talking about the business between central banks and commercial banks, but we are talking about retail CBDCs. We're talking about the M0 equivalent in the digital world, so the paper money, but digital. So it's now, but additionally, the whole discussion has popped up based on cryptocurrencies, right?
Exactly. So I think, the first cryptocurrency that we know was Bitcoin, introduced in 2009 with a white paper. And some say that it was introduced in wake of the financial crisis and the distrust in the banking systems. And what cryptocurrencies really are a form of anonymous and decentralized money. So what this meant was that cryptocurrencies have a certain or an inherent amount of convenience and decentralization. And these, we won't go too much into cryptocurrencies. I'm sure we'll cover that in another episode. That's a whole Pandora's box for itself. But cryptocurrencies have become a threat to the present day traditional banking system. And to compete with this, many central banks have kind of just joined this fight, and now they're considering to launch their own versions of cryptocurrencies. And I think one important distinction here, when we mean cryptocurrencies, we will not mean blockchain-based coins like Bitcoin or altcoins. We will be actually talking about digital currencies, in the sense that these are digital currencies backed with some cryptography. And this is what we'll mean with cryptocurrencies. So these central banks are now creating their own versions of cryptocurrencies, and they are known as central bank digital currencies, or CBDC. And they will be, as we know, operated by the respective monetary authority or central banks of a particular country.
Yeah, some of the things that define the CBDC, or the factors that differentiate different CBDCs, we've already mentioned some, but just want to sort of make a list. There is the ledger structure, which can be, as you already mentioned, central or decentral. There is the means of authentication, which could be a PIN code, or it could be biometry, for example.
Exactly, and this is an important point that I think we'll get to a little later. But the main aspect why I just want to take a quick second to explain is depending on how this is authenticated, whether it be just a PIN code or actually your face or your fingerprint, means that the actual amount of privacy you have may vary from anywhere between complete privacy to absolutely no privacy. but we'll get into that later. Go ahead.
Yeah. Other factors are the purpose for which it is issued, which might look differently from country to country. We will see the examples of China and Sweden, which are pioneers in this. The participating entities in the system. So will it be a system that is only administered by the central bank, or will they sort of monitor and govern the system together with the commercial banks in the respective country? Who is, on a technical basis, who is the administrator of the database? Who verifies payments? Who verifies account values? How's the currency issued? What security and privacy measures are taken? Also, what measures are taken for volatility reduction? For instance, so-called stable coins are backed by or are tied to existing fiat currencies, which means their volatility is limited, and reduced volatility is very, very central for any payment system or for any currency.
To create a sustainable and stable payment system that doesn't shoot up and down like, for example, Bitcoin, as we have seen it to do. And I think the last point is types of accompanied services. So the entire ecosystem in what's, how are these accounts exactly handled? Who's handing them out? Is it the central bank, or are there intermediary banks, the commercial banks? Who is accepting these, etc.? So let's get into how these exactly work. So as we know, these CBDCs are a digital representation of a country's fiat currency. So for instance, we live in Switzerland. A Swiss coin, for instance, would be a digital representation of the Swiss franc, which is issued by the Swiss National Bank. And these, of course, like traditional currencies, have to be backed by a suitable amount of monetary reserves. And nowadays, this is done with the dollar, so it could be foreign currency reserves. But again, because this could be such a tectonic shift, it could even be things like gold. These are all things that we will see. And exactly, another important aspect is that these currency notes or digital currencies have to be unique and identifiable. Just like you have unique numbers and all sorts of identification measures on notes and bills, these need to be present in digital currencies as well. And these, of course, have to be safe and secure, while also upholding the three functions of money that Valentin explained before. So mode of payment, a store of value, and an official unit of account. And another important aspect of these CBDCs is not that they aren't going to wipe out existing notes and bills. While there has been a general trend towards using cards, etc., more pushed further even by the pandemic due to hygiene reasons, the idea of CBDCs is, of course, that they coexist with these. So we're not talking of a overnight eradication of bills or notes or bonds. Exactly. And one reason why these central banks use CBDCs to counter the forward movements of companies like Facebook with Libra or other cryptocurrencies is that they combine the best of both. So you get the convenience and security of these digital currencies, but you also get the regulation, the reserve-backed money, and the other benefits of a traditional banking system.
Yeah. When we talk about digital currencies, we need to distinguish between decentralized currencies or blockchain-based currencies and all other currencies. And even if we talk about blockchain, we need to distinguish between public blockchains and private or permission blockchains. When we talk about Bitcoin, Bitcoin is a public blockchain payment, even though that's not its main function, it's rather an asset, but it's a payment, a currency. And for private permission blockchains, one of the projects, as you already mentioned, is Libra. And we're going to talk a bit more about Libra later on, because Libra is the main private project by Facebook predominantly and some other firms when it comes to creating a digital currency. Usually these are set up as so-called stable coins, which already mentioned are backed by some kind of value. It could be a basket of fiat currencies. It could be one single fiat currency, or it could be some other physical asset in the real world that this stablecoin is backed by. Yeah, maybe you have some examples on that, right? With in Japan.
Exactly. So, for instance, one famous example is the in 2017 introduced crypto ruble, a digital currency that is pegged to the Russian ruble, commissioned by the Russian president Vladimir Putin. It isn't a cryptocurrency like Bitcoin or Ethereum, which are more public. These are issued by the government and not mined. And so this is already a step towards more private blockchain or cryptocurrency, sorry. Others would be Petro. I think this was a very famous one in Venezuela by President Nicolas Maduro. Also in 2017, was also meant to kind of digitize or create a currency reform. And this currency was actually supposed to be pegged to the country's oil, natural gas, and mineral reserves. So again, these cryptocurrencies, you can peg them onto any real life resource, any asset, and thus kind of introduce some kind of stability. And yeah, in general, the idea of private permission blockchains versus public is an interesting one, in that CBDCs would be largely private or permissioned, because it will be the central banks or central bank and commercial banks together releasing these, monitoring these, regulating these. And insofar they are different from Bitcoin, which is a public ledger distributed among all nodes. So these are some of the differences between CBDCs and more publicly known cryptocurrencies.
Yeah, coming back to the BIS, which serves different function, but as for now we can just see them sort of as the community of central banks. Three principles that have been outlined.
What does BIS stand for?
So Bank of International Settlements, but we're not going too deep into its functions. But the three principles that were outlined by the Commission in the BIS is, first of all, the central bank the central bank should not compromise monetary or financial stability by issuing a CBDC. This is based on the idea that every central bank or every national monetary authority is issuing their own CBDC. So there's no overarching global CBDCs. So that given, all the central banks should make sure that the monetary and financial stability is guaranteed in their jurisdiction. Then secondly, as you've already mentioned, that's something that that the central banks are conforming themselves to, is it needs to coexist with other forms of money. It needs to complement them, which means that commercial money, which is what you spend on your credit card, is still available, and that paper money, the coins, the bills, is also still available. And thirdly, the CBDC should promote innovation and efficiency as sort of a digital, as a basic digital payment layer or monetary layer that other financial and other services can be built upon.
Exactly. I think that the main point of the third principle is to make sure that we're not taking a step backwards, right? But we'll get into the benefits and risks of CBDCs. And as we'll see later, there are many benefits as to why countries should move to CBDCs. We'll look into that later. Now, maybe to take a look at the current state of the industry, right? So we found this chart by the Atlantic Council. By the Atlantic Council, that kind of shows the progress of these digital currencies, tracks the progress, how far are these countries. So we have a range from research, so those that are mainly in the research phase, and these are actually the biggest amount of countries. So if you look at this chart, we have the USA, Russia, Kazakhstan, Afghanistan, Iran, Turkey, Pakistan, Australia, New Zealand, much of Western Europe, actually, Norway, UK, Ireland, Germany. They are all in the research stage, in that the central banks are still weighing the benefits versus the risks. And of course, the situation is a little different for every country because every country's economy and thus economic needs are different. Some countries are part of larger economic zones, such as Germany or France, or even Switzerland, which is part of the European Economic Area, but not as fully integrated. So there are a lot of things to discuss, debates, and make sure that these central banks don't make a wrong move and can really maximize the potential of these CBDCs.
Yeah. So first pilots have been conducted by some countries. Some countries have entered the pilot stage, with China and Sweden being the most prominent one. And also we have seen pilots in Ukraine and Thailand. Now, but who is supporting them in undertaking this? Who are the big players in the market? Now we know that all of this is also driven by the developments with and of Bitcoin, which started with Satoshi Nakamoto and the paper and the whole idea of creating a digital, decentralized means of currency and payment. But the implementations of CBDCs will probably have, as we've already explored, little to nothing to do with Bitcoin, and probably not even be a blockchain, but essentially just a centralized ledger, a central database administered by a central bank or another government entity. But still, it's nice to go back to where it all comes from initially, at least supposedly. But who are the big players? Who are the ones that enable technically that this will be implemented? And we see that R3 Corda is currently working with Sweden, for instance, on their private payment system, and they are, as far as I know, at least they're specialized on private DLT networks, on private blockchains. And I think also in the case of Sweden, they are building such a blockchain. Now, they are really aiming to build the DLT standard for financial service providers and businesses in the industry, and they are already quite a big player. Another one would be Ripple, which just hired a new senior director for engaging with central banks on digital currency policy. So they're definitely moving in that direction. But the real interesting development is another entity that is building their own digital currency, which is Libra, right?
So exactly, yeah. No, go ahead.
So Libra is a private blockchain-based digital stablecoin. Now it has a basket, or currently what is planned, at least to our knowledge, is that it's packed to a basket of 50% US dollars and 50% yuan, which would make it neutral. But as we will see, or as we can see here, most companies are US companies, or the most companies that are part of this consortium are US based, which includes Facebook. There's also Coinbase, Shopify, Spotify, and Uber. Interestingly, large US payment providers, PayPal, MasterCard, and Stripe, and Visa, as well as eBay, have withdrawn in October 2019 without naming specific reasons. We could create some hypothesis on why they left the project, but we aren't. Now,
I think I remember when Facebook introduced the Libra, there was a lot of talk about, oh no, they're trying to poach data from the financial market as well, and Facebook addressed these concerns. They stated that Novi Financial a third party would manage Libra for Facebook users, and that they would not be allowed to share purchase information with Facebook without user authorization. So I'm sure that Facebook will have benefits for those who share their payments information, purchase information, and that you might get better recommendations, better deals. But again, it's optional, right? You can select out of this, and I think a lot of this depends on how it's actually executed. And thank goodness we don't have to wait that long. We actually just recently read an article that on TechCrunch that Libra will be released in 2021 in January. So, yay!
Yeah, let's see how that plays out and whether this will actually be the case. But coming back now to the governmental projects, let's look into what China does. And their project, which is called Digital Currency Electronic Payments, features this digital yuan. In April of this year, China has selected 4 cities to first have a pilot for this digital currency, which is based on the R3 Corda's ledger. Now, it includes the idea that you can convert this digital yuan from the physical yuan. Also, you have account balance checks and payments. So it's a really basic pilot, and the citizens can undertake basic functions like storing money, retrieving money, and paying and payments. Now, in October 2020, in Shenzhen, I hope I'm spelling this more or less correctly. Okay, thanks for that. They have issued a lottery where the winners were getting a free account with some digital yuan in it. Also, in the city, there's more than 3,000 shops that are already accepting it. And China's idea is to replace a significant amount of cash in circulation already by 2022, which is quite soon.
And just to quickly mention, you mentioned that that people can convert their yuan into digital yuan, kind of 1-to-1, and that it represents kind of a first step, being just a digitized version of yuan and not its own currency. And I think that's and we'll get into this later, but it has the benefits of being easy and transparent for people to use, and that they know that they don't have any complex exchange rates or anything that they could get stiffed on. They know that 1 yuan in real life is 1 digital yuan. But on the other hand, we will see that one of the bigger concerns or risks with the CBDCs are bank runs. So when people rush to take their deposits, banks usually work with a fractional reserve system. So that means that they only have to keep a certain percentage of the money that you deposited physically, and they usually use the remainder of the money to invest it otherwise, and thus create more money. So, for instance, an initial $100 that you deposit may only have actually $30, and the bank might take $70 from you and loan it to someone else or invest it elsewhere. So out of an initial $100, they can create $170. And if you have this 1-to-1 conversion, and if people rush with their digital yuan for some reason to the central banks or the issuing party, they have to make sure that they're able to back it if it's 1-to-1. So that'll be an interesting challenge. But as we said, more on that later.
Yeah, correct. So fractional reserve banking will either be limited if people have accounts at the central bank directly, or if people have special purpose accounts at the commercial banks, which are special purpose in the sense that they serve the purpose to hold and spend CBDCs. And in that case, probably other reserve banking rules and guidelines will apply. But coming back to China, why is it that China, obviously having such a great technology hub, innovation hub such as Shenzhen, I apologize again, is a big advantage for China. But why is it that China is moving so fast? And some insights on this is they're saying themselves that they want to protect their monetary sovereignty. They see Libra as sort of an American project. And if you look at the participating entities, it really is. Officially, we haven't seen much involvement from US authorities apart from the cycle of them regulating it. But this could obviously change. Now, China knows that big parts of the global financial system relies on US infrastructure and on US oversight and US rules, so to speak, which is the US dollar itself as a means of payment, as a means of doing trades of whatever kind of good you're trading, especially, for instance, oil. But also the US dollar as reserve banking currency. So a lot of central banks are holding 60-70% of their reserves in US dollar, with decreasing tendency, but still. Also for some central banks, increasing tendency. But also the SWIFT payment protocol that is tied to a lot of the cross-border payments that are happening around the world. So China really sees today's financial system as US dominated. So that's one reason why having a pioneer role in CBDCs with the digital yuan makes a lot of sense for them. Another one is anti-money laundering and increased government insight, which, as we will explore in both the benefits but also the risks, the CBDC offers a lot of potential for government control, as we've already said as well, Ani, with biometry, especially in combination with biometry. Exactly, another example is Sweden. What about Sweden?
So Sweden, they introduced this e-krona, which sounds a lot like Corona. This e-krona by their Riksbank, if I'm pronouncing it correctly.
Riksbank.
Yeah. Riksbank. And they use this as a kind of replacement of their digital payment app Swish by Swedish banks. And so this includes e-wallets, so wallets that you can have on your phone, which is nothing new. It also has this DLT, or distributed ledger technology, as well as an interoperability with banks. So what this means is that with this interoperability, you can use this currency in many more areas, and much like a kind of a network effect, the more places you can use the currency, the more valuable or the more dominance the currency gets. So, and interestingly, Sweden is not introducing this for the technological benefits, at least not primarily. The reasoning is that merely that the cash use has decreased. So that's really interesting, because most countries, they see the immense benefits of CBDCs, but Sweden reasons that, they're just merely following the trend of their of the Swedish people, in that cash use has decreased, and so they adopt. But I'm sure they're aware of all the benefits, and I think it's a great move. It's a smart move, and many people are saying that CBDCs are no longer a question of if, but more of a question of when. And I think we'll get into it. But as I understand, even the Ukraine also has some very interesting pilots and projects planned.
Yeah, that's just basically a couple more examples with Ukraine and Thailand, because both of these projects have been closed again. In case of Ukraine, there was a blockchain-based pilot for a digital currency, which was closed in February 2020 due to lack of technology maturity, essentially. So they were really basing this on blockchain. And in case of Thailand, there was a so-called project Intaton, and it was meant as a proof of concept for a wholesale CBDC, which was meant to be a means of domestic interbank and cross-border transfers.
All right. So the money market funds, etc., these included, not just everyday customers.
Not a retail CBDC.
I see.
Okay, why is this relevant now? We're looking into.
I think we've talked a lot about the benefits and risks, but I think we can finally dig into why now? Why digital? Isn't cash good enough? Credit cards are fine. Why do we need this? So there are many pain points that will be solved, and we'll see in many examples that the current COVID-19 pandemic is a good example of how a CBDC could alleviate some of the troubles that we're facing. So I think the first real benefit is a reduced time and friction of fiscal and monetary policy. So fiscal being focused on taxation and spending, and monetary policy regarding the actual amount of money that's in circulation. And so instead of having these effects affect us indirectly, instead of the central bank having to use measures like interest rate adjustments or quantitative easing that indirectly affect us and take some time, central banks could now directly introduce effects that could be felt more instantly. So one concept is known as helicopter money, which was, I think, brought up way back in the 60s. This idea that they could directly come from a helicopter and just drop money to everybody. So if we all had digital holdings of currencies with accounts directly with the central bank, they could directly encourage us to spend more. They could directly even lower interest rates on borrowing or incentivize spending through a number of measures, maybe introducing coupons or even giving an expiration date on money if it is not spent by a certain time. So there are many direct possibilities for the central bank to intervene in extraordinary times. So in the example of COVID-19, you have a pandemic, stimulus checks need to come out, and we've heard a lot of issues of these checks taking time to reach people. Now, if we all had accounts directly with the central bank, they could just, with a simple button, enter 100 US dollars, sent to everybody, enter, and every person would have within a few minutes the money that they should get, which makes this whole thing really easy, really efficient, really fast.
Yeah. One main argument that you could take is the reason of the emergence of CBDCs right now is that central banks are not able anymore to fulfill their function, to do fiscal and monetary policy with the instruments that they have at their toes, or at their fingertips, rather, which is, as you mentioned, quantitative easing, changing interest rates mainly, and they're looking for direct ways to influence our spending behavior, to influence our economic activity, and CBDCs could be such a way. Now, what it also means, it is potentially a competition towards the commercial banking system, because as we've already discussed, when you bring your money to a commercial bank, the commercial bank is then able to lend out your money and some multiplier of that towards borrowers, and creates sort of money which we call fiat money. Now, the idea that you have an account with a central bank directly, either this or you have an account at a commercial bank for the purpose of using CBDC, is that there's less commercial money in circulation, right? You're replacing some of the commercial money with the CBDC. Not necessarily, but when you think about, when you have the two options, you open a bank account with a commercial bank or with the central bank, and you use this for everyday spending, then this is sort of a competition against commercial banking.
Exactly.
Now, as we said, it's important to maintain the central bank's ability to exercise fiscal and monetary policy. And Libra and also cryptocurrencies are also a threat to that, right? Because the higher the volume of payments being orchestrated via new cryptocurrencies, via Bitcoin, via Libra, the less power the central banks have in exercising their instruments. Right? Now,
exactly.
Interestingly,
other benefits, include, for instance, that you can have fast, almost instant payments, and that these have no, heavy transaction costs. That we can have a more frictionless market, not just nationally but internationally, even globally. So this is actually a target by the G20 to have cross-border payments to facilitate these, and I think CBDCs can go a long way here. And further, there are more minor advantages, such as, you don't have to invest in bank lockers to store these CBDCs. Transportation is easy. There's no, physical contact or infection risks, as we now know. That will be an important topic going forward. And interestingly enough, another aspect is with the direct insight into where the money is, the ability to track it, means that tax evasion or even tax avoidance, or using your money for money laundering schemes, or investing it in morally not right things, or criminal activity even, can be directly tracked, traced, and stopped. So this is definitely a big bonus.
Coming back briefly to the policy aspect, when we talk about direct economic policy and direct economic intervention into people's behavior, one important aspect is access. So if there is a service that people theoretically can access, it doesn't mean yet they can actually access it. So when we talk about third world countries, you need to be able to create some sort of system where the risk and the threats of collecting money is reduced for people. And that's a big advantage of CBDC, when you do not have to physically go towards a store, travel a long distance through maybe a threatening, dangerous environment to reach such a store in order to collect your money, but you get it physically via your cell phone, for instance. So this is also where CBDC can have, and also cryptocurrencies in general, can have a big advantage.
Exactly. But, as anything, there are some risks involved. There are some issues. And the biggest and most obvious one is, of course, if it's digital, it can be prone to cybersecurity or hacks, cyber attacks. This would be kind of a gold mine for somebody if they could break open this. So this security has to be addressed, with apt security measures, verification, two-factor, three-factor verification. But I think, given how far we've come with banking, and for instance, when I need to log into my account, I have to use a two-factor authorization, enter the details, use my phone, and enter a PIN, makes it quite secure. So I think this is an issue that needs to be addressed, but it's not impossible or difficult to address.
Yeah. Now, when we talk about the emergence of CBDCs, one potential, well, it could be a benefit or it could be a risk, is a change in the power circumstances between let's say the big superpowers, China, US, and all the other economies. Both scenarios are possible when CBDCs will either lead to increased power for the superpowers or less power. Let's explore the latter first. So if all countries are able, so let's say countries are able to use each other's, and not necessarily US's or China's, CBDCs, and they are able to have interoperability between their protocols. They are able to do cross-border payments. The function of the US dollar would be undermined. And it
at the very least, if not replaced,
yeah,
right?
Yeah, if not replaced. And also SWIFT, the SWIFT protocol, potentially would not have to be in use any further. So this could mean sort of the end of the US imperium based on their financial imperium, based on the US dollar status and its monopoly as the world reserve currency. So it has some huge implications on that side. It could be that China would take over that role by being the first provider of the digital yuan and by having a superior CBDC that functions best. But it could also be that it is just as described, that sort of the other nations are regaining sovereignty as to how they trade with each other, how they trade cross-border. On the other hand of the spectrum, it could increase the power of US and China. And that would happen in the case, or sorry, not of China necessarily, but US. And that would happen in the case if these CBDCs are still utilizing existing infrastructure, are still governed by existing entities, are still administered the same way and regulated the same way that paper money and that, more importantly, the global financial system is. In that case, you would just accelerate the idea of US dominance. You would increase US dominance further, and would essentially combine this with a big issue with CBDCs, which is privacy, right?
Exactly. Yeah. So depending on how these transactions are authenticated, there could be a lot to say regarding privacy. So if you use, for instance, biometrics or facial scans, your privacy is at risk, of course, because every transaction can be traced back to a person. And that really was not the idea of cryptocurrencies like Bitcoin. The anonymity of this is kind of is lost. And I think while it's tricky to outweigh this kind of security versus freedom, if there is a transparency regarding these payments activities and the use of these biometrics, I think that would work. So, for instance, we discussed the idea of having that, say, the Swiss National Bank has some of the information, and the remaining information is with the Swiss government, and that they cannot access the others' information, thus rendering the actual information that they have useless. And only in a criminal investigation would they be forced to cooperate to reveal the data. So if there was transparency and oversight into the process and dealing with this data, then it could be made secure. But again, it all depends on how it's executed, and not just how it is written in the law, but how it effectively is handled.
Yeah, so it really depends. Like there can, like a CBDC would mean increased government power, which would be positive in terms of reducing fraud, in terms of having proper anti-money laundering policies, but it would come at the disadvantage of increased government power, which is only good if there is transparency. And transparency can only exist with strong institutions. For instance, the judicial system, the law, any kind of consumer-oriented organization that acts as a representation of the consumer, as the yeah, exactly. So there needs to be strong institutions, and that's a basic problem, because we cannot guarantee this in a lot of countries in today's world. Now, another issue, coming back to the policy aspect, the economic policy aspect, is if you have a direct means of influencing economic activity, you're also introducing inflation potentially, because inflation has not gone away. It's just that the mechanisms that would start inflation, they don't seem to work the same way anymore. So if you introduce money into a banking system that is not appearing in the economy later on, that is not being spent, you do not necessarily introduce inflation. But with a CBDC, it is very likely that inflation might come to fruition. And so this is one major risk as well that comes from a CBDC, as well as bank runs.
Exactly. So there's actually a study or a working paper by the Bank of England in 2018 where they tried to negate these risks of a bank run. Essentially, as we mentioned before, if people rush to the bank and try to get their deposits, say in the time of a recession, and the bank does not expect that everyone comes at the same time to withdraw all the money, because if we take the earlier example of taking 70 francs from the 100 francs deposited and lending them to someone else, now you have 170 francs that is being demanded, but you only actually have 100 francs. So that becomes a little tricky. However, the working paper mentions having stricter roles or rules and regulations for creating new credits, moving away from this fractional reserve, and that will have, again, huge impacts. So if this fractional reserve system is abolished, say, imagine in 50 years if all the currencies worldwide are run, or all the markets are run using CBDCs, and you don't have a fractional reserve banking. That has its benefits and downsides. You have lower risk, but also fewer gains to be made, as you can't leverage the money.
Yeah. Another risk is that paper money ceases to exist, because for paper money to not exist anymore, it is not one potential reason is not just that central banks are actively working against paper money, but another reason is that availability and convenience of paper money just is not there anymore. So it could start with many shops and stores not accepting paper money anymore. It could be that the conversion of paper money to CBDC is unfavorable towards paper money. It could be that the storage of paper money is becoming more expensive for the consumer.
Yeah, exactly.
Many other reasons, right?
Yeah, I mean, like we in Switzerland, for instance, we don't have that push as much. There is some demand for using cash, but we do see in stores you usually have the option of either standing in line at the cashier. You might have to wait 15, 20 minutes, or maybe 5 to 10. We don't have as big lines. It might be that you have to wait 5 to 10 minutes if you want to paper cash, but there are usually self-paying machines where you can scan the products by yourself and pay it yourself. And these go faster, right? You're usually done in 2-3 minutes instead of having to wait for 10 minutes. But you can only use credit cards and digital payments. So I'm sure we will see the central banks not just introduce CBDCs, but also introduce all sorts of incentives to use these, which will also be adopted by markets. Lower interest rates. I even remember a few years ago when paying with cards, about 8 or 9 years ago, when you used to go out for lunch in school and you paid with your credit card or debit card, you usually had to pay 50 cents or $1 on top for using a credit card. Those incentives are gone now. More and more people are using cards. So I'm sure we will see some sort of guiding more people towards using digital currencies, because, of course, as we've seen, the benefits are manifold, and it does run on some extent has these network effects where the more people join, the more benefits.
Yeah. One last concern I would like to mention is that the increased ability of governments to run economic policy and to influence economic behavior is not just an advantage. It's obviously also a risk. So if you, for instance, have money with an expiration date, that means that the government or some sort of government entity supposedly decides, for instance, that you can only spend the money on your account for the next 2 months. So, for instance, it introduces helicopter money, but tells you can only spend that within 2 months.
Exactly. So imagine that during a pandemic, right? You have a recession, you try to stir up spending, you give people $500 on the condition that they spend it within the next month. Otherwise, they get a bill for $500 to their account, right? So this brings in a lot of, as you mentioned, normative decisions by the central bank, right? Who gets to say what's correct, what's not, who gets to decide that. It introduces a whole array of discussions that are very essential in a democracy and a free capitalist society. So, but again, it all depends on how these CBDs are implemented, right? Whether we see, this is unlikely, whether we see a kind of one world currency, or whether we see each country having their own CBDC, which can also be used alongside normal money, fiat currency, in countries that have not adopted it yet, thus kind of devaluing the dollar's central position. It could also mean maybe we have 2 or 3 big players like Libra or a US-backed coin and the digital yuan, and then these countries kind of vying for countries to join their side, kind of like an Apple versus Android. On which side are you? That you could imagine that maybe Southeast Asia, and Africa would all join, and the Middle East would join China, and maybe Europe and South America, North America would join the US, and it all depends on how these are implemented.
Yeah, absolutely. So in the following, what we'd like to do is we would discuss some of the core features that should be introduced in order to mitigate some of the risks. And we will imagine sort of our utopia in how a world with a CBDC could look like in the future.
Exactly. So some of the main features that we'd seen, again, was this interoperability. So it has to be convertible to money. There should be, it should be complementary towards money, not eradicated overnight. It should be easy to use, right? It should be convenient to use and be low cost. So introducing heavy transaction fees into CBDC use would inhibit it. So this basic idea of availability and acceptance, how widely is it accepted? How well is it integrated? But then more technical aspects.
Yeah, so obviously you need to have a robust legal framework based on the central bank authority. It needs to conform to appropriate regulatory standards, for instance, AML prevention, fraud prevention. It needs to be scalable, so it needs to allow for high volume throughput, just like Visa or MasterCard with several thousand transactions per second. And it needs to be interoperable with other parts of the financial system. It needs to settle quickly, and it needs to have resilience to technical disruptions.
Exactly. Yeah. So that will be interesting, right? What happens if the power goes out? If your phone is dead, what do you do then? So there are many infrastructures and institutions that need to be built up in order for us to really leverage this. But now that we have these, core features defined, how would this fit into the tech landscape? What do you think can we achieve with this?
Yeah, let's look at its core function first, which would be like payment, and it would really foster innovation in the payment space itself. It is, apart from its effect as competition, it is really an aid for commercial banks and fintechs to build their services on top, with a simple example being a wallet, but also any sort of credit facilities, peer-to-peer lending, you name it. And it really is a basic infrastructure for a digitalized world. So if you talk about digitalization in general, digitalized payments based on a government-backed currency is something that appears to be a logical next step, especially if you think about cross-border payments, which today is expensive, time-consuming as in it takes a long time to settle. And so it's really not that convenient and user-friendly.
Exactly. I think especially if we look at the kind of third aspect of this, security, vulnerability, and the privacy issues, we have these alternative payment methods like Bitcoin, Ethereum, Ripple, but trusting them, many people are still kind of afraid. It's really volatile. How do we do this? So I think CBDCs really bring all the benefits, this kind of foundation for a digitalized world or a globalized digital world, combined with the trust that you get from central banks. Exactly. As we mentioned, we have to work on the privacy and security issues, make sure that they're all set. But once we have those down pats, I think we can really look forward to a digital world, not just a digital country. These cross-border payments, especially instant, these are big deals. So, depending on how these are implemented, one way I think these can transform societies is how they influence the power structure, hierarchy in our world. So this could, depending on the scenario, we could see certain countries, especially US and China, gain more power, more influence. they might also lose it depending on how it is implemented. There's also an ease to use the market. It becomes easier. You have more financial inclusion. More people can afford to use the market because you have zero to no or no to zero to very low transaction costs. You have an instant access. There's no the downsides of traditional money, carrying it, storing it, transporting it. So these become easier. But I think also towards digitalization, right?
Yeah, absolutely. Instant and frictionless payments are a necessity for our societies to work better in the digitalized world. And an example here would be micropayments. A lot of what we're talking today, we have a lack of ability to measure value with payments. So you cannot, for instance, pay for one Spotify listen. You cannot pay for one YouTube watch. Obviously, this is done indirectly. In Spotify, it is an organization that collects royalties. In YouTube, it's done via ads. But let's say you want to support an artist on a small platform, an artist who does not have enough audience, not a big enough audience to sort of create attention for ads. You can do that with instant settlement with CBDCs on a micro basis.
Exactly. I mean, and even beyond that, especially in third world countries, for instance, if you want to, if a farmer wants to open a smaller store in a poorer region, he or she, they could apply for a micro loan, right? These can be done by micropayments. They can be settled instantly. We are seeing that level of digitalization already now. For instance, in India, many people don't pay with cash at all, not even credit cards. They use phones. So apps like PayPal or Twint, as it's known in Switzerland, where you can directly send money. It's used in petrol bunks, even people who deliver milk, daily vegetables, do your ironing, your clothes, etc. So I think it has really potential to bring a level of security and this connection to a bigger frictionless world more instantly to the fingertips of to billions of people worldwide, right? I mean, if we just think about CBDCs as a standalone technology, we're looking at micropayments, a decentralized system in regards of payments, right? It's not one central US dollar. Maybe we have multiple currencies playing together. We have more instant transactions. But I think it's not as exciting when compared to how CBDCs could play in with other technologies.
Yeah. One more thing that I'd like to mention is it could also change the financial system. It could change the landscape of financial service providers. There could be less intermediaries needed into the system. The role of commercial banks in society could change. It could also stay the same, but it could change, and they could have a decreased relevance, decreased influence on political decisions as well. So this has also huge implications on society. Obviously, if we look at combination with other technologies, the big technologies that as standalone technologies already have big value come into mind. We talk about artificial intelligence. We're talking about Internet of Things, and we talk about different authentication technologies. When you have digital payments, you have the ability to scan for payment frauds, especially when you have a large volume, a large number of transactions. Also for individuals, the idea of having an account of your payments can help you to take optimized decisions, for instance, when it comes to consumption. Also e-government wise, government can take decisions about subventions, about payments paid out by government, about tax administration in an automated fashion. And what about fintechs, for instance?
Yeah, I mean, fintechs, right? There's a lot of technological progress that can be leveraged using CBDCs, right? Be it wallets, the way we carry them. It could be maybe one centralized card with all your data or all your payment methods in it. This also has huge implications for trading and transactions. But for another interesting area, I think even more than fintechs is blockchain, right? So we mentioned that CBDCs are not blockchain based or don't necessarily have to be, but especially given how the first instance of blockchain was Bitcoin and how it jumped forward from Bitcoin to Ethereum, where you now have smart contracts, right? You don't need escrow accounts, you don't need third-party verifiers. You have an algorithm that takes care of the legal process and does it in a simple, efficient manner. I think if we can solve such issues, maybe a second or next level of CBDCs includes programs encoded into it where certain payments are released upon the completion of certain tasks, certain items, right? I mean, you take out so much work that third parties have to do and just can stick it into an algorithm and poof, it's much more easier, right? And yeah, I think it could really be a fundamental shift in our economy. Accountability. There's a lot to change, yeah, for sure.
Yeah. So when it comes to IoT, when it comes to sensor systems, think, for instance, about two energy providers. Let's say you have a wind-based energy system and you have a dam filled with water. When you have sensors and you have CBDCs or automated payments in general, they can lend each other supply. They can lend each other supply and automatically settle the transaction. So that's just one example of how value-based supply chains could be based on top of sensors and the combination of sensors and CBDCs, when transactions are automatically initiated based on a sensor giving a signal. For instance, on a potential when a good passes the border, and the payment then instantly settles. All of this is enabled by digital systems in general, but CBDCs especially, because they offer a secure way of payment and transaction settlement.
Yeah, I mean, imagine, right? You have CBDCs, IoT and sensor systems, as well as a programmability that we know from Ethereum. I mean, that sounds really exciting. Currency conversions, etc., all done seamlessly without you ever having to look into the system. Right, you just move it across the border and it's already done. That's amazing.
Yeah, and the last point is biometrics, which we've already discussed, but it also has, while it is a surefire way to reduce fraud and to do anti-money laundering, it also has huge privacy issues that we can probably discuss in another episode as well.
Yeah, I mean, there are already, for instance, in China, there are airports where you don't need passports, you don't need anything really. There's no check-in counter, there's just a booth. You go in, the face technology already recognizes who you are. Your biometrics are linked with your bank accounts. In this case, it would be a CBDC, right? You check in, it takes the payment due if you have, say, extra weight. And imagine you never have to pay anything. Or Amazon now have their first brick and mortar stores without any person in it, no physical person. You have a shopping cart with sensors. You place your items in it. The scanners on the side of the trolley scan it, and the minute you leave the store, it automatically books it from your Amazon account.
Yeah, the future seems to be here. So
But I think we can go much further. So I guess we'll have to wait and see.
Yeah. So guys, what do you think about CBDCs? Let us know in the comments.
Exactly. I mean, there are many issues, as we discussed, right? Privacy issues, security issues. So do let us know. What do you think? Would you sign up for Libra as it came, or would you wait? what's your right? Would you give up the notes for a CBDC or digital currency in general? I think that's it. Any other thoughts? Let us know in the comments. We'd like to make this as interactive as possible. And I think for next week we don't have an idea yet. I think as of now it is like the future of cars, right? Self-driving cars, alternative fuel options, right?
Yeah, autonomous transportation. Absolutely.
Exactly. Unless something interesting happens, and we'll cover that. But as of now, it looks like that will be the podcast episode or topic of our third. But yeah, thanks a lot for sticking around. I hope you enjoyed it. I hope you could take away some things. I hope you were inspired by the future of these digital payments. And have a nice day and stay safe.
I hope you will stay Utopian.
You're maniacs.